Highlight a client win for you. I had a client get a home $50,000 under list price because we leveraged a tool that allowed him to close in 2 weeks. Use the tools that are available, work with professionals that help get the job done and win in this market because there's wins to be had. We got a peace deal in our first meeting with my guy, Kevin Warsh. So the Fed was at it this week. Here's what you need to know. Here's what's moving the market. So peace deal, first and foremost, that was a huge win. Obviously, the conflict in Iran has been messing with oil prices. We saw oil prices drop on the heels of that as of Friday, June 19th. That memorandum of understanding was signed. I think at this point, everybody understands, hey, with peace, hopefully comes lower oil prices, lower energy prices for everything. Energy prices directly impact cost of everything, which means higher inflation. Higher inflation is bad for mortgage rates. So some added relief, still kind of a temporary period. So fingers crossed we see some stability and hopefully rates coming down. What it means for buyers is that we've seen some stability. Rates haven't gotten worse. They could have gotten worse. They haven't. So that's a win. So if you got people on the sidelines, if you are on the sidelines, encourage them. Hey, look, it's not really worth waiting for rates to get better. Rates could get worse. If the numbers work for you, let's find a strategy that works. Let's go. Now is the time to go. Go when the time is right, not when you think you're going to time the market. Everybody knows that. There's your reminder for today. But my guy, let's talk about my guy, Kevin Warsh, on the podium. He said some things that the market didn't love, and actually rates got worse out of the meeting with him talking. But let's talk about why. Rates got worse because he explicitly outlined the fact that the Fed would no longer be giving forward guidance. They wouldn't be hinting to the markets what changes they'll be making. I personally like that. I think it will help prevent volatility and prevent positioning politically from the Fed. He said the Fed wouldn't be susceptible to that type of pressure, so no forced rate cut, for better or for worse. He also said he's going to be establishing a lot of committees to basically look at how the Fed has been doing business. How do we improve? How do we focus the Fed on being a forward thinking, not forward speaking Fed? So a Fed that's really focused on, hey, what are the needs of our country now? What are the needs of our employment base now? How do we manage inflation now? How do we leverage things like AI and understanding what that means for inflation in the long run? He didn't say he was going to get rid of the 2% inflation target, which I'm a fan of. I think that's a whole other backstory there, but he did say a lot of things that I think are going to be really positive for the Fed, for the country moving forward. The market didn't love it because they basically said, like, hey, nobody's going to give us a clue of where money's going. And they were mad. And they threw a fit. Bonds sold off. Mortgage rates got a little bit worse. But hey, we got the peace deal. That's helping kind of keep things in line. One thing that I thought was really, really interesting, he specifically didn't put his dot on the plot. And I thought that was such an interesting move. So if you don't know, the Fed issues a dot plot. It's a projection of where they think rates are going. He just didn't do it. So props to my guy, Kevin Warsh. What this means for the housing market, I think, is going to be more stability. They're going to be taking a serious look at how we measure the health of the economy. And I think that's a fairness that we all deserve. I don't think the Fed needs to immediately be printing money. However, any type of quantitative easing, whether it's reduction of interest rate or balance sheet or introduction of money supply, can be inflationary, but it will bring rates down, which can also kick up the housing market. Well, what happens when that happens? Rates come down, prices go up. That's inflation, right? That happens in the housing market as well. So the advice is and has been, hey, look, new guy's at the helm. He's not changing directions in a big way. He's changing kind of the baseline, how the Fed operates, which I feel like will create more stability, which seems like it will create more stability in the housing market for buyers. We won't see massive swings in interest rates because we get some forward guidance based on a small segment of data that's going to whipsaw interest rates, which is what we've seen in 2023 and 2024. He's saying, hey, look, it's not our place to do that. He mentioned specifically that a lot of these dots came in on pencil, meaning they had erasers. They could have changed them because they understand that things are uncertain. And so he said it was irresponsible of the Fed to be predicting and giving forward guidance because we need to be, that's what Kevin's saying, they need to be nimble. They need to have real tools to help manage the economy, which I think is what they should do. I think that's serving American people well. So I love it. I'm excited about it. Obviously not the response we need. We're not slashing rates right away. Mortgage rates, mortgage bonds, they kind of got over, the initial gut punch of, throwing a fit that they weren't going to get forward guidance. And I think it settled out. And I think what it means for rates moving forward with a peace deal, even though it's temporary, is just more stability and a slow downward projection in rates, trajectory in rates. So prep buyers, if you have buyers, if you are a buyer, just be ready and be ready for the right opportunity. The advice hasn't changed. even though we've got a new Fed chair. But I think overall, great news. If you need anything, send me a message, leave me a comment. I'm here.